Travillian Next is a division of Travillian, a financial services specialist search and talent advisory firm. Since inception, the Travillian team has dedicated itself to enhancing the return on investment of a company's most important resource, its people.
Welcome, everyone. Thanks for tuning in. I'm excited about today's event, and I know our viewers are too. My name is Dimitris Malisianos, and I'm going to be your moderator for today. I am a principal banking and Fintech Search here at Travillian. Travillian is a boutique executive recruiting firm servicing the financial services industry since 1998. We celebrate our 25th anniversary this year, and my division specifically covers financial institutions all over the US, assisting boards, executives, and senior leadership teams with their most critical succession planning and executive search needs. Please connect with me and Travillian on LinkedIn or Twitter and visit us at travilliannext.com. Also, to learn more about our recruiting practice and current search engagements, visit us at travilliangroup.com. Today, I have the pleasure to introduce you Mr. Jason Mikula and Mr. Panagiotis Kriaris. Gentlemen, welcome both. Thank you both for being here with us today. Before we get started, let's take a moment to introduce yourselves. Panagiotis, let me start with you, sir.
Thank you, Dimitri. Nice to be here in a good company. So my name is Panagiotis Kriaris. I have a background in financial services, mostly in banking, payments, and fintech, so a combination. And as I'd like to say, I have the privilege or benefit of having been on both sides of the fence, so I understand a bit of both sides. And now I'm working currently for a fintech company called Unzer. So great to be with you.
Awesome. Thank you so much, Panagiotis. Jason, sir.
Thank you so much for having me, Dimitri. I've spent about 13, 14 years primarily in the consumer credit space in the United States as well as in the UK. Currently, I work advising and consulting for kind of seed stage through Series A, Series B startups around product strategy, go-to-market, as well as publishing fintech newsletter each Sunday. And the topic today, super relevant given, grew up in the US, I live in Europe, I run a small business in Mexico. So I've done a lot of cross-border payments in my time personally,
wow.
If not work-wise.
Wow, thank you. Thank you so much. I know that both of you, you've been in different kind of seminars, in different kind of conventions, talking about innovation, talking about banking, talking about like cross-border payments. So we're going to touch base we're going to start with an issue that it's very hot and it's a lot of people are talking about it, which is the cross-border payments. Jason, let me start with you. Give us an overview of what do we mean when we say cross-border payments?
I mean, at the most simplistic level, it is about what it sounds like, right? You have a sender and a recipient of funds that are in different countries. I think frequently, but not always, you're referring to potentially cross-currency payments. So both moving from one geographical jurisdiction to another, but also potentially, again, but not always, having a foreign exchange component in there. And again, typically, but not always, this could involve something called correspondent banking, which I imagine we could probably unpack in a little bit greater depth, although there are regions where that wouldn't necessarily be the case, right? So for instance, Europe, where I currently live, or at least the Eurozone area, has SEPA, which is the single euro payments area, or a clearing and settlement network in euros that is shared among countries that operate on the euro currency. So you are going to see some regional differences in exactly how these kind of payments are effectuated. But yes, at the sort of simplest level, moving money from one country to another country.
You said something very on point and very accurate. You said currency fluctuations. Panagiotis, I mean, when we talk about foreign currency fluctuations or possibly delays in processing, are there any potential risks and challenges associated with that?
Yeah, I think cross-border payments are notoriously inefficient, I would say, especially if you compare them with domestic payments, right? And if you want to mention maybe one by one the main kind of concerns, I would say that high costs is one, transparency or the lack of transparency is the second one, slow response times. So this would be probably the main ones. And I think what we want to touch upon today is that I think there have been a lot of efforts lately or in the past many years to kind of address these inefficiencies of cross-border payments. We're going to discuss how much successful they have been and what are the different, let's say, solutions behind them. Maybe just one step back, going back to your previous kind of point before we touch upon the drawbacks of cross-border payments. So I would say, adding to what Jason mentioned, we probably can see the players in three different layers, I would say. So the first one would be what Jason mentioned is the correspondent banking space. So essentially, if I want to send funds from A to B, and most of the times you do this through SWIFT, which is a messaging kind of layer working with banks, right? So if there is no direct relationship between bank A and bank B, right, there are kind of intermediaries. So this is how they facilitate the sending out of payments. So that's probably one. The second one is what we most of the times call closed loop setup. So if you have sent out money with Western Union, with other companies, I guess this is what you would call as a second choice. And the third one is this kind of fintechs that have been developing over the past years, maybe decade, and they're trying to address cross-border payments in a different way. So you call it blockchain. For example, you have Ripple, or you have other, let's say, companies like TransferWise or Wise, if you want, today trying to build a new kind of setup addressing or acting as an alternative. And of course, you have the big players like MasterCard and Visa. We can discuss what exactly these guys do on the space. So
absolutely. You talked about SWIFT. Now, I know that this is like one of the main system when we talk about cross-border payments. This is when we're transferring money from A to B. And I know that there's like a lot of developments right now. So let me, and then a lot of discussions about the ISO 20022, which is, this is something new that is coming up, a new development. So can you share with us a little bit more? Jason, let me start with you, sir.
Yeah, absolutely. I mean, the short story is that it is a international standard that allows for structured data to be shared alongside a payment message or a payment instruction, right? So imagine, right now you're moving, you need to wire $1 million from Chase in New York to a business in London. That has some amount of information in it as far as, what is the sending account, the receiving account. You probably have various other information if there's like a currency exchange that's embedded in that payment message. What the new standard allows for is additional information around sender, receiver, the nature of the transaction to be transmitted alongside that payment instruction is the short synopsis.
Wow, and that's huge. Panagiotis, I think this will create like a much better infrastructure. Will it create like a better speed between transactions? Will it help the banks do one transaction with another faster? Can you share with us more?
Yeah, let me say that when it comes to this standard, actually it's not new, right? So I think the body that was developing it first got together in 2002, and they produced something that came out like in 2004. And then I think has been developing since then. And the main idea behind, and actually Jason described it quite well, the main idea behind is to improve the efficiency. So because it's all about data, right? And what do you want to do with data? You want to improve the efficiency. You want to improve the interoperability. the automation of financial messaging, and actually, the more financial institutions adopt this, the better it is, right? So that's the idea. So, and I think that we're going to discuss also today later on, but the entire kind of, let's say, game changer in terms of cross-border payments nowadays is data. What kind of information? So how rich the data actually is, and how fast they can move across, let's say, borders, if you can put it like this. So
Sure.
ISO is considered by everyone, I think, today to be the new golden standard, if you may, right? The adoption is quite well, although we are not there yet, and it has taken us quite some time since 2004, right?
Absolutely. And that was my next question.
If I can
go ahead, Jason.
If I can give a little more context or an example of how that could work in practice, right? We're talking about cross-border payments, and we used the word correspondent banking earlier. In my example of sending a payment from New York to London, that transaction probably doesn't only involve those two banks, right? It probably involves at least 4, if not more parties who are touching that transaction. Absolutely. One of the things that tends to slow down and increase the cost of these transactions is the number of banks or number of parties involved in processing it. Keep in mind, the bank in New York, the bank in London know who their customer is, hopefully. These banks in the middle that are, correspondent or helping sort of forward it along don't have a direct relationship with the customer. So one of the potential applications of this additional data standard is to provide more context around who the parties are to the transaction, helping to address questions around, KYC, KYB, know your customer, know your business, helping to mitigate anti-money money laundering risk, and in turn have these transactions happen more quickly and more automatically, so faster and less costly.
Absolutely. Thank you for that, Jason. That brings me to my next question, which is security and privacy of the transactions. Because when we don't have like 2 banks right now, and we have, like, as you correctly said, Jason, 3, 4, or additional banks, how do we ensure that the security and the privacy of those transactions, when we're dealing with like sensitive financial informations, are being secured right now? And what would be like a possible, would it be like a possible like fraud issue, a fraud challenge, a problem that we need to take into consideration? Panagiotis?
I mean, I think security is always a concern. And of course, fraud is something that you always kind of can encounter. So, and I think this is also the challenge when it comes to cross-border payments, because we are talking here about the setup that is, in the best case scenario, a few decades old. So the infrastructure is quite, running, let's say, legacy systems 20, 30 years ago. I mean, actually, SWIFT itself launched in 1977, if I'm not mistaken. So you can understand, this was quite some time ago. So security is always a concern. Fraud, I mean, we also had some fraud cases involving SWIFT. So, I mean, I would go back probably to what Jason was explaining around the ISO and how do you treat data. So, I mean, the better the messaging system you have, the better the information that you have, the better the infrastructure that you are able to run. I think all this comes down to better security, better fraud prevention. And I think this is also what major players are trying to do. We mentioned SWIFT. I would say that probably nowadays 90+% of the cross-border payments globally are running on SWIFT. And that's why SWIFT has also been trying to address to all these concerns in terms of time, in terms of security, in terms of privacy. And I think they have launched a few years back what they call SWIFT GPI, which is, you can imagine that this is kind of an enhanced version of SWIFT. And basically the difference has to do with data, right? So it has to, so all these topics that we have been mentioning that ISO tries to bring in place, the same goals apply to Swift API. And this is concerning the wholesale side. So if you now want to look at the retail side, I think they have also launched recently a similar product, which is called maybe Swift Go, if I'm not mistaken, and it's trying to do the same for the retail side.
Okay, well, I know that there have been like a lot of developments and a lot of innovations happening in the last years. Like if you look like cross-border payments, when it used to be like, back in the 80s, like the 90s, 2000, up to what we have right now, there's a lot of innovations, as you said. Are there any new, besides that, anything new, exciting coming up in the next like 5 to 7 years that it's going to totally change the cross-border payments as far as technology?
I mean, of course, I think there is a trend nowadays that we go in the direction of real time. So this is not only concerning cross-border, but this is a generic trend. So I think this is also going to be touching the cross-border space. So that's one. Now, I think we have all been hearing and listening and maybe trying lately what's happening on the artificial intelligence space, so the AI. So I think you cannot, some way, so one way or the other, this is also going to be becoming in the space as well. Now, if you combine this with things like open finance, which has to do with the data and how you get access to data, and with, I mentioned before, some efforts from new fintechs to either connect to the rails, to existing rails, or to create a new setup that is going to go beyond what we have today, like, for example, Ripple based on blockchain. I think you have a mix of things that are going to be influencing what will be happening on the space in the years to come.
You mentioned Ripple, you mentioned the block space, and discussing about like real-time payments. I am aware that a lot of central banks are implementing right now, or have already, created and implemented like a CBDC, which is a Central Bank Digital Currency. Before I get to you, Panagiotis, Jason, can you share with us what does this CBDC means?
Yeah, I mean, it sounds complicated, and it often gets discussed in sort of the same breath or the same space as cryptocurrency, but CBDCs, or central bank digital currencies, are actually quite distinct. The easiest way to explain them or think about them is it is a digital representation of a physical paper dollar, right? And without going too far down this monetary rabbit hole, if you take a banknote, if you take a US dollar out of your wallet, that dollar is a liability of the Federal Reserve, of the US Central Bank. Money that's sitting in your Bank of America bank account, that bank deposit, that is technically not the same thing. That is a liability of that bank, not of the Federal Reserve itself. So the idea of a CBDC is that it would function as the equivalent of digital cash, something that potentially a consumer or a business holds that is a direct liability of the Federal Reserve, but in an electronic format. There are sort of different models or different ideas of how this could work in practice. Most typically, I hear the terms retail versus wholesale. Retail meaning a end user would actually hold this CBDC and use it to, pay their friends, pay bills, etc. Versus wholesale, which would look something more comparable to the way the system in the US works today, where the Federal Reserve has CBDCs that are the equivalent of bank reserves, and then today's existing retail banks would still be the institutions that consumers interface with. So as you mentioned, there are countries that already have such systems up and running, most notably China. But also I want to say the Bahamas, a couple countries in the Eastern Caribbean are running a pilot. But there are a couple of different ways that in practice this technology could be deployed.
Wow. I know that China has it. They officially launched it. Panagiotis, correct me if I'm wrong, but Europe is about to officially announce it very soon. Uh, I know that US is falling a little bit behind. I know that they're going to have a lot of developments. I know that they're going to adopt it in the end because that's like central banking that everybody needs to follow suit, like community banks, regional banks, international banks. Can you share with us a little bit more? I mean, I know that China has it. Is Europe about to announce it? What is happening with US also?
In terms of who is doing CBDCs today, and actually these are central banks, I would say everybody is trying to do something, one form or the other, of CBDCs. I think there was a survey from the Bank of International Settlements, and actually they say that close to 90%, I think 86, maybe this number has gone up in the meantime, of central banks globally, they are experimenting with CBDCs, right? And if you look a few years back, nobody was doing this. I think what I always like to, so there was a kind of a wake-up call for central banks. I think it was in 2017 when Facebook actually tried to launch something. They called it back then the Libra project. And I think that was the time when the banks realized, the central banks, that, hey, we have crypto. There is something happening here, and we are at risk of being left behind, right? So in this kind of situation, there's always two things you can do. You either stay out of the game and you cannot influence the game, or you get in the game and then you can hopefully or potentially influence the game as well. So for me, this was a wake-up call. And I think ever since we have seen all kinds of initiatives taking place. I think Jason mentioned the main ones. You made the reference to Europe. And in Europe, for example, there is a discussion about the digital euro, which is the European version of the CBDC. And actually, they are debating to announce one in summer, I think in June, so it's probably a few months away. But you have to imagine that, from the moment that you announce something like this to the moment that this actually becomes that you have the implementation, you might have a few phases in between, which might take years, right? So you need to test it, you need to see how it's working. So you have to go through at least 2-3 phases. Now, China, as you mentioned, has been a front runner in this one. They have actually launched, so they have a CBDC, which is a retail one, based on what Jason was describing before. So retail versus wholesale. I think they call it E1 or something like this, so CNY, if I'm not mistaken. And actually, this also has let's say, a hybrid architecture, meaning that normally, and as Jason mentioned before, so normally, so the funds, they originate from the central bank, but they can be distributed through commercial banks, right? So you always have a pledge to the central bank, but it's a matter of decision how you're going to distribute it. And the most popular way is to also involve the central banks, and that's what China has done as well. And they have the benefit of being the front runner. I think they have been launching maybe a couple of years ago. I think even in 2021, they have been launching a pilot involving this type of digital currency. So I would say that they are actually quite advanced, but you have to take into account that China is coming from a very different background in terms of banking infrastructure. So this is a country that doesn't have the typical, let's say, structure with credit cards that we have in the West or in the US. So these guys have been skipping one wave of the evolution of payments, I would say, and they have the super apps, the digital wallets, the QR codes. So this is very well, it matches very well with these developments. And we can also discuss the reasons why the central bank in China decided to be a front runner in this one.
Sure. Yeah, absolutely. I mean, I would love, to get like a little bit more information with this, because I know that CBDCs one way or another, they're going to be adopted like throughout the world right now. But I know that some countries and some continents have like some countries like China, for example, they have it already launched. They had like a pilot phase, as you correctly said, back in, I think, in Winter Olympics, when they had the Winter Olympics. I know that there have been some developments, in Europe, but I think US is about as last, to announce it. So, let me ask you this. Will Jason or Panagiotis, will this be an opportunity to have like an open market competition? If I can have like instant real-time payments, and if I have like, for example, like a bank in US, will that give me the opportunity to offer like loans, products, services in another country, and have my products like worldwide, and have that flexibility to get paid and be paid and pay on a real-time payments?
Yeah, I mean, I think the short answer is not to be a pessimist, but probably not, in the sense that even if you solve the payment piece, so solve the money movement piece, if you could make that instantaneous and zero cost, which I think it's clear it can be instantaneous. I think it's less clear that it can be truly zero cost. But let's say you could do that. Are you going to have a bank in, Ireland or UK or Brazil servicing originating loans to consumers in the US? Probably not, because you still have an entire local regulatory regime with which you need to comply, right? So even if it's possible to easily and quickly move that money from Ireland into the US, you still need a lending license to operate in the United States, whether that's in each of 50 states or through having a bank license. You still need to comply with a slew of lending regulations. So, you can solve the money movement piece of it, but that doesn't automatically unlock sort of the rest of these scenarios. Those require, a not insignificant amount of incremental work.
Got it. Panagiotis, the CBDCs, like, I know that maybe they're not going to have like that capability, like, from a bank perspective, to go to another country. But will that create like extra, like, higher risks, frauds, or KYC challenges with just having like real-time payments in a domestic country?
First of all, we have to understand that the CBDCs, they are on the liability side. We can discuss what's happening on the lending side, but we have to start from the liability side. That's one. Now the second one is the interoperability. So we're gonna have systems running, let's say, in Sweden, in China, in the US, in Europe, right? So these systems and the setups, they might have all kinds of different structures and decision making along the way. So it doesn't go without saying that they will be able to connect with each other unless we address, let's say, the interoperability issue. And here we have the connection with cross-border payments. So this it doesn't go without saying, right? So we have to see how and in which format they will be able to communicate, right? That's one. And then if they do on the technical side, of course, you have to address the compliance side, of course, and you have to address the regulatory side that Jason mentioned. So it's not as easy as this, right? So that's one. The second point, which is for me more important, and I think this is, so the CBDCs, we are discussing here about essentially a very, very different financial setup for the economy as a whole. Because imagine, if you're a customer, if you're a consumer, actually, and you can have a direct claim to the central bank for your money, would you go to Jason, who is Jason Bank, or would you go to the central bank and you feel safer? I think it's a no-brainer. You would go to the central bank.
Absolutely.
And if this is the case, then we have a question, which is, what happens with commercial banks not being able to attract deposits? And if they're not able to attract deposits, how can they provide lending? So, it's not as simple as we can imagine. So these are fundamental questions that are addressing essentially how the economy works today. And I don't think that we have all the answers, right?
Yes.
So that's why in most of the cases, the choice of central banks to involve the commercial banks as intermediaries in this hybrid setup, or this two-tiered setup, to distribute the digital currency, I think is a way for them to involve them in the system, but you still have to be in a position to answer these questions in a way that makes sense. And if you want to do something which is completely different to versus what we are used to doing today, I think that will take time, that will take regulation, and that will take also people getting used to it at the end of the day.
Absolutely. I agree. And essentially, with all the regulations, all the policies taking place, the CBDCs is this the solution to bring like stability within banks, Jason?
I mean, I think at this point, that's a very difficult question to answer because it depends on how it's implemented, right? I mean, as he just said, it's like if you have this retail model, there's the opportunity for that to solve some pain points. On the flip side, you're now creating a scenario where consumers, businesses potentially feel safer keeping their money directly with the central bank versus commercial banks, thereby causing deposit flight, draining liquidity from the system, reducing the ability of institutions to lend. So I mean, I think this is kind of a cop out of an answer, but like it's too early to tell because it does depend on how it's implemented. I certainly think there are, it's worth watching what's happening in China, what's happening in some of the other countries that have actually deployed these systems live in their economy. That said, we need to sort of be cognizant that how something functions in the Chinese economy, which potentially has sort of much stronger centralized controls in place, may or may not generalize to what how that would work in the U.S. economy or other global economies.
Absolutely, yeah. And I know that it's a little bit too early, but I know that it's coming. I know that they created that kind of guideline framework. They launched it in some countries. I know that just predicting how this will look like, it's a little bit difficult. Panagiotis, how can in theory, right? How can a bank benefit from this, from a CBDC?
You mean a commercial bank or a central bank?
Yes, yeah, a commercial bank, yes.
I mean, again, I would agree with Jason. It very much depends how this is implemented, right? So if you are, again, I will go back to my previous point. So there are all kinds of ways and choices that the regulators have to make. And I think at the end of the day, the idea is not to get rid of the commercial banks. That's not the idea, right? So I think the banks can benefit the commercial banks in terms of being in the system versus being out. So they are going to be the ones distributing the funds to the consumers. They're going to be having direct access to funds, maybe wallets through which consumers are going to have access to the digital currencies. So they're going to be part of this, let's say, new structure. Now, and of course, you're going to benefit it's going to impact the digitization. It's going to impact the access, right? So you're going to be offering people that potentially do not have access today due to various reasons to also have access to this new currency. So these are goals behind introducing CBDCs. But again, we are not solving all the problems, or we are not answering all the questions. And I don't think that I don't think that central banks have had all the answers in mind when they were launching this. As I said, this was kind of a reactive approach as well, if you may, right? So there should be in instead of out. And I think along the way, we are trying to answer some of the questions that are popping up. And again, it very much depends, depending on the geography, depending on the model, depending on the stakeholders, depending on how they do things, how the answers are given. So as Jason mentioned, it doesn't mean necessarily that if you are applying something in a very specific way in one jurisdiction that you can take this and transfer this one-to-one somewhere else, right? So you have to be quite careful.
Absolutely. I know that CBDCs they created in order to replace like an old system, the old SWIFT system. I just hope and wish that with the regulations and the guidelines that they will come with the CBDCs, it's not going to create any higher risks or KYC challenges, and it's going to make the environment more difficult than already it is.
And still, the replacement of the SWIFT is a question mark, right? So CBDCs could be potentially an alternative to facilitating cross-border payments that we discussed about before, but it's still a question mark how much of a market share they can get, provided that they find a way to work together, which today is not a given. So I would say that we are very, very far away today from a scenario like this, especially when it comes to cross-border, because that's going to be the last one that they're going to be addressing or implementing, right? So the first one is going to be within the country locally, how is this working? And then the next step is going to be, okay, now that we have something that is working, maybe working in a different way here and in a different way there, how you can connect the two. And of course, you're going to have, these are design implications that you have to take into account at the beginning. Of course, you know them in advance, but it doesn't necessarily mean that you do them when you begin, right? So I think these are points that you have to take into account.
Absolutely. I know that there are a lot of innovations. They're coming, but I just hope that everything is going to be for the better. Everything is going to change the banking industry, the timing of the transactions, the safety and the privacy of these transactions. So we'll have like a more stable environment. Not that it is not stable, but it's going to be like a safer, going towards the more safer side or the more stable side that already it is, with having like much faster transactions and less risks and frauds. Thank you so much, Panagiotis and Jason. Thank you for your time. I know that we discussed some very interesting things today. I would like to thank you for being with us today, and appreciate your time.
Thank you.
Thank you so much for having us.
Thank you. Take care.